So we joined up with the Trump brothers. Eric Trump joined as a co-founder, chief strategy officer. Donald Trump Jr. came in as an investor and an advisor to really create that distinct American brand in the Bitcoin space.
It's interesting sort of where we see Bitcoin at and why billionaire real estate developers seem to be abandoning real estate and coming over to Bitcoin.
It's a heck of a lot less work to accumulate Bitcoin than it is to build enormous hotels and golf course developments.
You have president of the free world, Donald Trump buying Bitcoin and the Trump family buying Bitcoin, and then you still have like your cousin down the street telling you it's like a scam.
What Bitcoin is offering is a much easier way to store value and store the efforts of your labor into a commodity that over time is becoming more and more valuable.
How do you approach thinking about building out the infrastructure for America with Bitcoin mining?
There's really two kinds of infrastructure we're building out. There's the physical infrastructure of the mining, and then there's the financial system infrastructure that you might find with Bitcoin treasuries.
What's the experience like trying to build this infrastructure out right now?
This is something that fortunately...
All right, Matt, I'm excited to dig into this today. Thanks for taking the time to come and speak to me.
Great to be here. Excited for the discussion.
Yeah, I mean, we were just talking about Texas and Austin, which obviously you're headquartered there, sort of like the Bitcoin mining capital of the world, I guess. But I want to kind of get an understanding from you, sort of how you're looking at the world right now. It's pretty interesting what's happening from a macro standpoint. JP Morgan's talking about this debasement trade, gold and Bitcoin. Then we have this renewed interest in building the infrastructure of the United States with Bitcoin mining. Obviously, then there's this whole sort of new trend of companies buying Bitcoin on the balance sheet and treasury. So there's a lot of fun stuff I want to cover with you. But let's just talk about for a second, since we were just talking about Texas. Why are you in Austin? Why are all the Bitcoin miners in Austin or in Texas? What's going on there?
It's a great question. So I've been in Austin now actually for 5-6 years now, pre Bitcoin mining. Actually, I moved here initially to help build COVID testing infrastructure for the state government. So we were doing at the time, my partners and I, a bunch of COVID laboratory work, building big, heavy infrastructure to help support a country in need. And yeah, I realized how much I love the dynamism here, the ability to build, the ability to grow, the responsiveness of the government to making sure that private enterprise can thrive. And so when the opportunity came to build large-scale Bitcoin infrastructure with, at the time, US Bitcoin Corp, it was a chance to seize the moment and repeat a lot of that same playbook that we'd crafted for healthcare and apply that to heavy infra for Bitcoin. So Hut 8, our sister company, is actually headquartered in Miami. So in many ways, there are two crypto capitals in the United States of the new cities. There's a Miami style, a bit of the sizzle, and then of course you've got Texas, which is
one is crypto and one's Bitcoin.
Yeah, I think you're exactly right. I think Texas is the Bitcoin hub.
Yeah. Okay, so you mentioned the sister company Hut 8. So you're a spin-off of Hut 8. I thought Hut 8 was a Canadian company.
Right. So why don't we rewind the clock a little bit? So US Bitcoin Corp was a company founded in 2020. I was the chief commercial officer there with my partners, Mike and Asher. We grew US Bitcoin Corp to become one of the largest private Bitcoin mining companies in the United States. Several years later, we decided to merge that company into Hut 8. It was a great partnership. The Hut 8 team, which was Canadian, had a great Bitcoin hodl, which is over $1 billion worth of Bitcoin. Still have that on the balance sheet. Great capital markets, good brand name, and a really exciting partner for what we were able to bring operationally. So we merged with them in what at the time was one of the largest mergers in the history of crypto. And in that merger, we reflagged the company to an American company and moved the headquarters from up north in Toronto down to sunny Miami, Florida.
Okay, so I wondered about that. Was that right around the same time? I believe I saw announcements. You got one of the Trumps, I believe, on board.
That's exactly right. So fast forward a bit, we'd already merged USBTC into Hut 8 and created sort of a marquee publicly traded Bitcoin and energy infrastructure company. But as the old expression goes, there's really only two businesses in this world. There's bundling and there's unbundling. And the time had come to unbundle a lot of this Bitcoin emphasis into a pure play brand that became American Bitcoin. So we joined up with the Trump brothers. Eric Trump joined as a co-founder, chief strategy officer. Donald Trump Jr. came in as an investor and an advisor to really create that distinct American brand in the Bitcoin space.
Got it. Do you still have the mining facilities up in Canada, or have they all been also moved down to the United States?
We have moved the majority of our hash rate to the United States. There's so much opportunity to grow here. I think that the Canadian enterprise, it's good. It's been nice. In many ways, they've joked that it's our 51st state.
Yeah.
So we appreciate that hash rate. But we've really been growing our operations here, especially in Texas, as we chase great opportunities and sort of fresh builds for the American Bitcoin team.
Yeah. Now, let's talk about sort of this environment, this macro environment that we're in right now with Bitcoin. I kind of said earlier in the sort of that intro lead up that JP Morgan just sort of came out with what they're calling the debasement trade. And they're saying what sort of Bitcoiners have been talking about for 10 years, that government's always going to debase the currency, so we should buy hard assets, gold and Bitcoin. But I think it's interesting, specifically for you, because you've brought two of the Trump sons on to your company. And it's interesting sort of where we see Bitcoin at and why billionaire real estate developers seem to be abandoning real estate and coming over to Bitcoin, which I think is pretty interesting. And I think people should be paying attention to.
No, you're exactly right. So Bitcoin is this really attractive store of value. So a lot of folks are appealed. Real estate has a lot of appeal for folks. If you think about storing value and it's their nest egg and people are investing in their house or maybe some rental properties, what Bitcoin is offering is a much easier way to store value and store the efforts of your labor into a commodity that over time is becoming more and more valuable. And so as people get excited about buying real estate, a lot of them are realizing that, hold on, this might actually make more sense as a Bitcoin trade. And so it's no surprise to me that a family that's so steeped in real estate development would see the appeal of what we're doing. It's a heck of a lot less work to accumulate Bitcoin than it is to build enormous hotels and golf course developments. Now, building a Bitcoin mine is quite a lot of work. So we're still putting in the effort and putting steel in the ground, but it's a different sort of mission with a different sort of output.
Right. But they've been getting involved in all types of Bitcoin businesses. So from Bitcoin treasury companies, Bitcoin mining companies, Bitcoin exchanges, right? So they're almost like spreading their tentacles. And as I said, I think it's worth noting, and that's why I wanted to bring it up. You still have, interesting enough, right? We're at this time where you have Larry Fink, head of BlackRock, the largest asset manager in the world, saying to buy Bitcoin. Paul Tudor Jones has been all over the news for years, and now this week again about buying Bitcoin. And you have, president of the free world, Donald Trump buying Bitcoin, and the Trump family buying Bitcoin, and then you still have like your cousin down the street telling you it's like a scam.
Yeah, there's that old quote from Gibson about how the future is here, it's just unevenly distributed. And
Right.
we're starting to see that happening in real time. I remember 5, 6, 7 to 10 years ago trying to explain to folks about Bitcoin as a inflation hedge. But that was not really getting a lot of traction. People would patiently tell me, Matt, we don't really have that. Inflation's calibrated 2% a year. We've kind of solved for that here in the United States. What's really the appeal to any sort of inflation hedge? And then now here you and I talking about debasement in real time, and suddenly that inflation hedge is looking pretty compelling.
Yeah, well, I mean, sure, what's wrong with 2% inflation? Well, other than losing 10% of your wealth every 5 years, I mean, sure, nothing, I guess. I would rather not lose 10% of my purchasing power every 5 years, but maybe I'm just, maybe I'm simple-minded, I don't know. And of course, it's not 2%. I look at inflation as the rate of that monetary debasement, right? And so you can look at the money supply. The US M2 supply has increased by 50% in the last, really 40% in the last 5 years, and how much is gas up, and how much are homes up, and how much is steak up, and how much is gold up, and right, everything's up 40-50%, right? So I think that's the real number. But I think it's exciting, not just for the debasement trade, the store value, but now all the businesses, all the industry being built out. And you talk about building infrastructure. So right now it seems like the Trump administration is really focused on making America great again, making America investable again, making America build again. And so building out the infrastructure is a big piece of that. How do you approach thinking about building out the infrastructure for America with Bitcoin mining?
In America, there's really two kinds of infrastructure we're building out. There's the physical infrastructure of the mining, and then there's the financial system infrastructure that you might find with Bitcoin treasuries. So the Trump administration has actually been fantastic for both of those. So to the mining side of the business, we have a pro-energy government. We've got folks that understand that we need more energy and we need it now. We need generative capacity. We need better transmission lines. We need more sophisticated forms of off-taking. We need to be able to trade around peaks. These are all things that Bitcoiners and Bitcoin miners have been swimming in for years. So having an administration that's genuinely bullish on the electron, it's good for us and good for what we want to do on the power side. On the treasury side, there's a whole host of financial infrastructure that's also getting built out in real time. Earlier this year, we saw the Genius Act get through the government. That was a fantastic piece of legislature. There's a few more market structure bills that are in the works. These, to me, are seminal texts. These are the sorts of laws that they're going to look back on the way that oftentimes securities lawyers look back on the 1930s as the cornerstones of what created the American financial system. We're doing that over, but we're doing it on a blockchain.
Yeah. Some of the things I saw Trump doing and some of the executive orders that he put through and these initiatives that he started this year was also in part of trying to really kind of reindustrialize the United States was to peel back a lot of the yellow tape, the red tape that sort of, bogs all of this growth down. Have you experienced that? I mean, has any of that helped you? What's the experience like trying to build this infrastructure out right now?
So if we look to past administrations, we, same as everyone else, we're dealing with a fairly hostile environment when it came to opening things like bank accounts. You would be one day doing business and the next day being told that you frankly weren't welcome and your money was stuck. And so we were somewhat victims of our own financial system as Americans. This is something that fortunately has really stopped. That Operation Choke Point era is over, and we're better forward as a country. So those permittings and that chokehold that they had on the ins and out points of crypto were pretty serious and things that really slowed down the ability to build this industry here in the United States. And now that that's been rectified, we're obviously seeing so many of the jobs and so much of that energy coming back stateside.
Yeah. So when you think about, just a couple of things that we framed up already, from the debasement trade, people waking up to that, the Trump administration, the Trump family getting into Bitcoin, which is obviously a big signal. I think they probably know some things we don't have access to, so probably pretty bullish on its own. You look at the political headwinds that have turned into tailwinds now and are lifting this space up. So I'm curious from that macro standpoint, we look at a bunch of different factors. What are you looking at Bitcoin? What do you sort of think is this bull case scenario? What are you expecting over the next 5-10 years?
Bitcoin offers the average American this off-ramp from the fiat debasement situation that really before there was no good outcome. Your options were other fiat currencies, real estate, as we've discussed. You could buy some shiny rocks. Gold's been on a bit of a tear itself.
Yeah.
There's really nothing great about that as when it comes to a good store of value and something that has a compelling use case or financial future for the country. I'm happy that the gold folks are feeling vindicated, but gold to me is not an optimistic trade. That is investing in this sort of pre-monetary system as an escape from modern day society. And look, while I'm glad folks have found a store of value that works for them, Bitcoin offers all that and more. And more people are seeing the value of having their money or their hard work stored in something that has that fungibility, that ease of transferability, that verification on a blockchain. There's a lot of value add to Bitcoin above and beyond what the gold or the gold premium would be for store of value. And that's something that I only think is going to increase.
Yeah. So when you think about, mining Bitcoin, how do you approach the actual Bitcoin that have been mined? So I'm just curious, what your strategy is. Is it we're selling this for revenue, cover our costs, or do you have some sort of a strategy, maybe with your shareholders or capital that you've raised that allows you to hold it for the long term? Or are you sort of more opportunistic and maybe you'll sort of buy and hold around cycles? I'm just kind of curious what your viewpoint is on that.
American Bitcoin benefits from having that mining business, pretty big, 25 exahash today, scaling from there, and also a treasury component. So we haven't sold a single Satoshi since we listed the company in April. To your point around financial structures, we actually have access to a multi-billion-dollar at-the-market offering vehicle that we're able to use strategically to raise money to buy more Bitcoin, to cover some of these expenses. So we really haven't dipped into the till when it comes towards liquidating Satoshis and paying for things. And that's not something that we foresee doing. For us, Bitcoin is the end all be all, is what we're really geared towards accumulating. And as we think about our North Star of Bitcoin per share, I'm not really interested in things that would reduce the Bitcoin per share that I can then offer my shareholders.
So then your publicly traded Bitcoin mining company is quite a bit different than what you might see with others, Mara or Riot or something like that, whereas they're mining Bitcoin, they're selling the Bitcoin, maybe some of it they keep, but your policy is to get more Bitcoin, whether you mine it or you buy it.
Our attitude is that investors in a Bitcoin mining or a Bitcoin treasury company really want one thing, which is maximal Bitcoin. So oftentimes I really refer to American Bitcoin as a Bitcoin accumulator for that reason. We're accumulating Bitcoin. It's that simple. Some of our peers, you're right, they may want to sell or they're trying to be strategic and trade around it. My version of strategy is dollar cost averaging into the hardest asset on earth. I'm not really interested in selling. I think that the energy arbitrage aspect is interesting, but for me, that's just one part of the operational discipline to grow your stack. So I'm very mindful of things like SG&A, very mindful of the cost of power per month, curtailment, trading, energy, things like that, but really only insofar as it allows me to hodl as much Bitcoin as possible.
Every day we see headlines about inflation and debt and diminishing control over our own money. That's why I always come back to Bitcoin, because it's built for generations. It's built for legacy. But protecting your Bitcoin legacy the right way it's not always simple. It demands discipline, focus, and the right partner. Now that's why I personally use Unchained Signature. It's a premium private client service for serious Bitcoin holders who want expert guidance, resilient custody, and an enduring partnership. Now with Signature, you're paired with your own dedicated account manager, someone who understands your goals, helps you every step of the way. You're going to get white glove onboarding, same day emergency support, personalized education, reduced trading fees, and priority access to exclusive events and features. Unchained's collaborative custody model is designed to provide the same security as the world's biggest Bitcoin custodians, but for those who prefer to hold their own keys. Now, I've been using and recommending Unchained for years. I even got my parents to set up with them. So if you want to get set up, check out Unchained Signature at unchained.com/MarkMoss. And as a loyal listener, I got a discount for you. Just use code MOSS10 at checkout to get 10% off your first year, because your Bitcoin isn't just for life, it's for generations.
I mean, that's pretty interesting because as far as I'm aware, I mean, all of the publicly traded Bitcoin miners are more like gold mining producers, if you will, right? So they get in the raw asset, they kind of do what they do, do with it, and then they sell it back into the market. So the Bitcoin miners bring it in, they bring the Bitcoin into existence, they sell the Bitcoin back into the market. But your Bitcoin mining company is not that. Your Bitcoin mining is your Bitcoin mining is part of a bigger strategy,
Correct,
of a Bitcoin accumulation engine, and the
Correct.
Bitcoin mining is one component of that business, but the overall strategy of the overriding business is to accumulate Bitcoin.
Well put. For us, the Bitcoin mining is a way to accumulate at a discount. I want as much Bitcoin as possible, as fast as possible. If there's a means for me to get it at a 50% discount, I'm going to do that as long as I can, as fast as I can. And that's what mining represents to us. It's this way for us to turn energy into Bitcoin. We can go by spot. So the things that treasury companies are doing, preferreds and converts and ATFs, these are all great financial instruments and each has its own place. But to my knowledge, the only way to accumulate any Bitcoin at a structural discount is to mine. So we struck the ground and we've been building big mines.
Yeah. That's interesting. Now, what are you seeing right now in the performance of the discount, I should say, the discount to mining Bitcoin? Because a lot of people would look at some of these Bitcoin mining companies, the public ones, and I mean, actually, the last couple of months, the stock's been doing pretty well on most of these publicly traded Bitcoin miners. But for the most part, last couple of years, it hasn't really been performing that well. It looks like their costs are so high, it's not that profitable for them mining Bitcoin. What is the profitability like to mine Bitcoin right now?
So when it comes to the profitability of mining Bitcoin, I would really pull American Bitcoin out from our peer group. And here's why. If you were starting a brand new Bitcoin company today, a new Bitcoin mine specifically, you're really wanting to really buy only one thing, which is the machines. Substations, transformers, electrical gear, concrete, all of that, the return on invested capital, I should say, is not that compelling. It's really going to come down to the machines and being asset light. And then also having as few staff as possible that are pulling away from that expenditure onto the exahash. So when we were putting together the American Bitcoin model at the beginning of this year, we thought we were almost reimagining what a successful Bitcoin mining company would look like. So for our peers, to your point, there's somewhat of a net drag. They have a lot of full-time employees. There's very high overhead costs. They're not really watching construction costs the way we had, but we were able to divide our core competency into the mining side where we own the machines. That's American Bitcoin. And then the building and development, which Hut does. And unlike other miners where they either need to vertically integrate fully in their own business and then they're paying all the costs for everything all the time, or they're working with a hosting provider, in which case someone else is trying to charge them margin, we've got a nicely aligned relationship. It's not antagonistic. It's cooperative. Hut wants us to grow. We're their customer first resort when it comes to Bitcoin. They would love to see us take 1, 3, 5, 10 gigawatts of Bitcoin mining offtake. And for us, we see Hut as a great partner. That's a team that's already proven out that they can build these massive facilities. And Hut 8 is not really looking to get Bitcoin returns. They want energy development returns. They want energy infrastructure returns. And that suits us just fine on the Bitcoin side.
Got it. So you're leveraging Hut to then sort of host and run that for you. So then you don't have all that initial CapEx investment that, to your point, creates that drag and it's so hard to get back to a profitable state from. You can buy the machines, deploy the machines, have them running without having to invest that, and then just give a small percentage of the revenue back towards Hut to help them offset their CapEx investment.
Precisely. My goal here is what they call lemonade stand economics. Energy and hash rate go in, Bitcoin comes out, we hold the Bitcoin. Not really interested in complicating that with a lot of other construction costs and things like that. It should be very streamlined, and that's just the way I like it.
Yeah. I just recorded a video. It hasn't hit my YouTube channel yet, but talking about Trump's One Big Beautiful Bill and the bonus and accelerated depreciation that got renewed, thankfully, and how you can take 100% depreciation in year one, and how a Bitcoin miner is a computer equipment that depreciates over a 5-year period. And so you can buy that Bitcoin miner accelerated depreciation for year one, and it works out pretty amazing to write off that taxable income. And of course, I talked about doing that through like a hosted miner. Most people, I mean, especially me in California, I can't run a miner at my house. My power is way too expensive for that. But from a personal standpoint, when I do the math, I mean, it looks very attractive. I'm assuming you're just doing the same at massive scale.
That's well put. For us, the bonus depreciation is one technique or one allowance from the government among a host of changes that we've seen and we hope to see that make our industry much, much happier here in the United States. The bonus depreciation for us, it's good. I'm pro any policy recommendation that's going to bring the jobs and the hash rate here to the United States. The depreciation, whether it's for a hosted peer of ours or for ourselves, to me, this is fantastic. I'd just much rather the hash rate be here in this jurisdiction than overseas in some autocratic country. And yeah, the bonus depreciation is a good part of that.
Yeah. Now, when I think about Bitcoin treasury companies, we talked already about the goal of trying to get more Bitcoin, right? Increase the Bitcoin per share that they have. You mentioned that mining Bitcoin is the only way to get discounted Bitcoin, especially compared to like doing preferreds or something like that. Maybe. I mean, they're going to pay out a 10% of that. They keep the spread, I guess the arbitrage on that. But I guess I'm curious, like when I think about Bitcoin treasury companies running a business alongside of it, typically I think of that treasury company deploying capital into a working business as a less efficient way to spend the capital. Most businesses don't do a 50% profit margin. And so to beat the hurdle rate of just buying Bitcoin, it seems like I'm destroying capital by putting it in any business, not just a Bitcoin mining business, but any business. I mean, no business is doing a 50% profit margin. So I'm curious how you look at that. Like, I have money came in, should I buy Bitcoin or should I buy more Bitcoin miners? And which one is actually more accretive to my business?
This is something that we think about every day at American Bitcoin, where to put that dollar for the marginal boost in HODL. Sometimes it will be miners and sometimes it will be spot. It's really going to depend on quarter to quarter, week to week. You know, where is hash price at today? Where are energy costs today? If I spend fiat dollars to buy those miners, am I going to earn back or mine back more Bitcoin relative to what I could buy today? It's actually a dynamic calculation. So there have been periods where we bought spots. So we did a large miner purchase earlier this year that was, we believe, net accretive and strategic to us. But we'd also explore spot buying. We've participated in the markets in that front as well. It is certainly a quarter to quarter thing. And you'll actually see, as we grow and evolve as a company, you'll see us doing one or the other, and that will give you some sort of indicator as to where we see the puck going. For us, the key thing on buying machines is to not get euphoric. Don't chase. That applies to buying spot and applies to buying machines. We want to make sure that we're not putting money into large orders when we believe there's going to be a cheaper machine opportunity on the horizon, better hash rate, et cetera. You saw a marked increase in efficiency over the past 2 years. We kept our powder dry at US Bitcoin Corp and then Hut 8. And then now with American Bitcoin, we've put the machines into play here that are really future-proofed for that next halving. And so if we're going to think about the halving, and by the way, it's maybe in 2.5, 3 years or so, I'm already still thinking about how are we going to make sure that our mining business can weather that storm. You really do have to be very thoughtful about where you're choosing to deploy capital. One thing that you mentioned is putting money into other businesses. I would stress that at American Bitcoin, we're really only interested in companies that are on the Bitcoin standard. I don't know how to run those other kinds of companies. I mean, there are aspects of them that I think could be net accretive. I would certainly look at any deal that would bring more Bitcoin to our balance sheet, but it really needs to be part of our core thesis. I wouldn't want to limit myself, but I also want to make sure that I'm not spending a lot of time and a lot of brain calories on something that is not really related to our core competency. When I was a consultant at Bain & Company, there was a line we'd always use about the importance of profiting from the core. And for us, the core is Bitcoin, whether that's Bitcoin mining, whether it's the treasury strategy work and sort of harnessing that volatility. Let's stick to what we're good at and be very thoughtful about expansion.
Yeah, I mean, it stay within your core competency is what Warren Buffett would call his deal box. right? Swinging at the ones I know that are going to have a high chance of completion. That makes sense. And I was just saying, in general, just in business in general, it's very rare to find any business, whether on a Bitcoin standard or not, that's going to have a 50% return. And so that's kind of where I put the hurdle rate for Bitcoin. So it's like, if it can't get and even if you bought a business that's 25%, I mean, I guess technically that's still accretive. It's just less accretive. And so I guess is what you're saying, if I'm repeating it back to you, is that every time you look to deploy new capital, you're just sort of looking at those and deciding which one's going to be the most accretive for the business, and you make your decision based off of that.
Correct. We are looking for things that are the most accretive in Bitcoin terms. Again, for us, the North Star here is Bitcoin per share. Mm-hmm. So if I look at these deals and I think, hey, this is going to result in more Bitcoin than we started out with, I'm interested. But to your point, that's a very high hurdle. There's not a lot of businesses that have that Bitcoin trajectory. And you know what? If that means that we stick to Bitcoin, I'm cool with that.
Yeah. So you're acquiring Bitcoin, you're building Bitcoin, you're mining Bitcoin, you're building up that Bitcoin base. What is then the next stage of the business? So you build up your Bitcoin base, and then what? You mentioned some of the Bitcoin treasury companies are doing preferreds or some other types of securitized instruments on top of the Bitcoin. Sort of what's the strategy that you have or you see forward?
There is a layer, in fact, beyond that one. So our business actually has 3 layers. Layer 1 is the Bitcoin mining. That's our core competency. That's effectively accumulating Bitcoin at a 50% gross margin. Layer 2, that's the treasury strategy. You've seen some of our peers using all sorts of financial techniques. We're aware of them. We are strategically doing what we want to do to grow our Bitcoin stack through the capital market side as well. But there's actually a third layer to this business, which is what we call ecosystem amplification. And there's really 2 ways I would position us for that. One is the American Bitcoin brand, and getting out there and getting known as a brand that is geared towards pure play Bitcoin accumulation is somewhat of a joke. Someone was telling me that when you search stocks, they can be alphabetical, and there are times where you search Bitcoin and ABTC is above BTC, which sounds great to me. But we are offering folks that Bitcoin accumulation product that the market doesn't really have in the way that we offer. There are ETFs that have 1-to-1s, and that's going well for the BlackRocks of the world, et cetera. There are financial strategy companies. I mean, obviously MicroStrategy or now just Strategy has pioneered a lot of those techniques. There are the miners, but for us, it's about taking the best parts of each. We want to be asset light, like we believe the best miners are. We also want to be thoughtful about liquidity and volume, like the best treasury companies. But this third level, this ecosystem play, that is where over the coming quarters, I would like to spend more of my time. That is, what does an ecosystem on the Bitcoin standard look like? Because Bitcoin is, to our earlier conversation, it's not gold. It's better than gold. It's different than gold. There is a lot of capital tied up in Bitcoin. What are the things that we can be doing as a Bitcoin standard company to support that growth? Is it financial services? Is it consumer facing products? Is it related to putting things into Bitcoin L2s, or do we want to start getting into swaps? What are the things we can do to get people using the Bitcoin ecosystem? Because all of that activity is net accretive to Bitcoin, both in the abstract sense, but also in terms of transaction fees, which routes right back to our mining business. So we're really trying to build a virtuous cycle here of mining and then treasury and then ecosystem. And collectively, you've got a pretty unique accumulator among all these Bitcoin companies.
Governments will never stop printing money, so inflation, it's not going away. Now, if your money's not earning at least 10% a year, you're losing purchasing power. Now, that's why I talk about Bitcoin. It's the number one way to beat inflation and secure your future. And the question I get asked almost every day is, where do you buy your Bitcoin? Now, for years, I've personally used River.com, and I only take on sponsors that I use and I trust. And I trust them because River's Bitcoin only, they have 100% reserve, and they keep your Bitcoin safe in cold storage with no middlemen. And you can actually talk to a real person, a US-based support dedicated manager. Now, try getting that peace of mind from Coinbase. Of course you can't. Now, the perks, if you set up auto buys, you can pay 0 fees. Plus, instead of your bank paying you, 0.4% on cash, River pays you 3.75% on cash paid in Bitcoin. So if you're ready to build your Bitcoin position with confidence, go to river.com/markmoss and get up to $100 in Bitcoin when you sign up. Because freedom starts when you own your money, and your money starts with Bitcoin.
When you think about the ecosystem part, is that like maybe like a venture capital hold company, private equity play where you're investing in, supporting in, scaling, you said earlier, bundling, unbundling businesses that support the Bitcoin ecosystem? Or is it more, like you said, financial services, where it's like, well, now we have this Bitcoin on our balance sheet. How can we mobilize the Bitcoin on the balance sheet to get it to create yield? Is it both, or is it one or the other?
I would argue the best of both. Right now, we're not looking at venture investments per se. I am, however, looking at things that could create operational streams of Bitcoin. So if there are opportunities for us to advance Bitcoin to a group, or work with a group, or take a stake in a group and build their base, and that brings a stream of Satoshis back to us. Ideally, they're already a Bitcoin native business, or they're a business where I can quickly get them onto the Bitcoin standard. That to me is really exciting and has not yet been tried. What can we do to get more companies in the Bitcoin universe working together collaboratively? Folks basically are building these products, and they say that first-time founders are very obsessed with product, and second-time founders are obsessed with distribution. After US Bitcoin Corp, now I've got American Bitcoin, and at American Bitcoin, I'm very, very interested in distribution, which is how do we get all of these cool technologies, all of these interesting layer 1, layer 2 solutions or Bitcoin-related products, how do we get those into the hands of the users? Because that's something that, frankly, if you look at the wider crypto ecosystem, was always a complaint. There were two questions I would get at these conferences. One is, where are the institutions? And then the other more pertinent question is, where exactly are the users of all of this stuff that's getting built? My attitude is that American Bitcoin is at the nexus of both. The institutions are coming. They want Bitcoin exposure. We're starting to see it, whether it's sovereign wealth funds, family offices, the big wealth managements, the RIAs. They are getting onto a Bitcoin trade, though, whether it's spot or through an ETF or working with an accumulator like us. The institutions are coming. The users are also starting to come. They might not even know with stable coins and things like that they're using a blockchain, but the users are starting to appear as well. And so if we can find a way to take the benefits of both of these two incoming secular trends to the Bitcoin world, it's going to be very beneficial to American Bitcoin.
Yeah. Yeah. I've been deploying venture capital into the Bitcoin space now 5-6 years. I'm a partner with the Bitcoin Opportunity Fund. And so we invest through the entire Bitcoin ecosystem. And we've had some really good plays. We tend to typically do things that are a little bit further stage, not early venture, but a little bit further along, already kind of proven out. But I kind of got to this point, the last couple of years where it's like we need less Bitcoin products and more Bitcoin in everyday products, right? To like really push that use case, right? And one, to the point that you just made, I think it was just yesterday, Morgan Stanley sent out messages to their clients telling them that they're going to start bringing in, I think, both Bitcoin and Ethereum for people in their Morgan Stanley account. So the RIAs, the financial advisors, they're pushing that down. That's pretty powerful. And then I think in just this last week, right, we've seen Jack Dorsey announce with Square quite a few things that they've integrated right into Square for the merchants to start putting to accept Bitcoin at no fee, be able to take a percentage of whatever they bring in and whatever they want to set to go directly into Bitcoin. And so we're seeing those things play out in real time. It's pretty exciting.
Yeah, I think it's tremendously exciting. Timing is everything, right? We're hitting a point where the public not only is interested in Bitcoin, but they're getting off of zero, and they're showing up, and we need to make sure that there's the infrastructure to support them, whether that is financial products like you're describing, more of this consumer work. I think the way you put it is so eloquent that we need more Bitcoin in everyday products or products that the everyday users have. I think we're about to see that shift coming in the coming quarters, and American Bitcoin is going to be a part of that.
Yeah. Now, you mentioned earlier, like when you think about buying the Bitcoin miners and making sure that the machines will last long enough to get to the next halving. So the Bitcoin halving cycle is something that in the Bitcoin space we've talked about consistently about every 4 years, or not even really about, like almost like clockwork. It seems like we have, a peak and then a trough. And at that time, the amount of new Bitcoin being mined every day gets cut in half. And a lot of people have said that supply-demand imbalance or shock or shift is sort of what creates these highs and lows in that Bitcoin space or in that cycle. There's a growing narrative that I tend to agree with that the 4-year cycle is basically dead. And maybe the 4-year cycle was always a meme and it wasn't really about the 4-year cycle. What's your take on that?
Well, look, I think doing 4-year cycles on an asset that's not even 20 years old is a little bit aggressive. And certainly there
we don't have enough data points.
Correct. There have not been enough 4-year cycles to declare a 4-year cycle with any degree of empirical certainty, if I could be so humble as to say that. There's something called a hyperstition, which is when people believe something into existing. And the 4-year cycle is one of those phenomena where when you think about emission schedules and you think about the role that miners play in the ecosystem, et cetera, there has been a grain of truth to it historically. And folks believing in the 4-year cycle likely precipitated more of a 4-year cycle. That being said, Bitcoin has had so many new adoptees and new investors and fresh eyes on it these days that I'm not sure people are as immersed in the lore of things like the 4-year cycle, the way they would have been in past Bitcoin bull runs. So when you lose that shared belief among the new investors, coupled with the fact that miners now are only accounting for 450 Bitcoin per day at the current emission schedule, it does take a little bit of the sheen off the 4-year hypothesis. So I'm inclined to agree with you that while it was perhaps a helpful heuristic historically, and while we are on a run, I think that part of the industry maturing is that we may be moving into a 10-year super cycle. We don't know yet. It's too early to tell, but the composition of investors is certainly changing in a way that's probably making it a little less predictable than it used to be.
Yeah. I think to the point you made, I think is very accurate, where people believing it to be so sort of almost then reinforces it to be so. And I see it all over. People ask me all the time. I see it online. A lot of people think that they should not be buying right now, or they should even start selling right now because we're at the peak of the cycle, as if like it's just going to happen on that day. And so, to your point, that's sort of like this self-fulfilling prophecy. It's like they're not buying, or they're actually selling right now because November is always the peak every year. November, 18 months after the halving. And that could sort of force a sell-off, even if the sell-off wasn't coming, right? So that's certainly there. Now, when the halving supply gets cut in half, to your point, 450, it's not that much. The supply demand imbalance is so great, between ETFs and treasury companies, institutions, it's somewhere, it ranges 5 and 10 times more demand than the new supply is being created. So you cut the supply in half, it's inconsequential. Yeah. So for the average hodler who's thinking about the price of Bitcoin, maybe that kind of goes away. And I would argue that it's the global liquidity cycle that's in the driver's seat here. That's the dog wagging the tail. And obviously, when we had the last peak in November 2021, we were in a different world. We had just seen record inflation. Jerome Powell came out in November, announced he was going to start hiking rates, and he hiked rates at the fastest rate hiking cycle in history. And today, he's not hiking rates. He just announced he's going to start cutting rates. So it's like we're completely different. And so for the average hodler, maybe the price stays up the same. But from a Bitcoin miner perspective, you do have to be prepared for the emission, as you call it, or the new inflation rate, to be cut in half.
Yes. So it's interesting that you bring in M2 and monetary supply as well as the Fed rates. The Fed rates are interesting for miners because, again, we build heavy infrastructure. So, of course, we're very mindful of debt and things like that. We do pay some of our bills, obviously, in fiat. And so we're very cognizant of where fiat is trading and what direction it's heading. The market is already awash in capital. And so adding rate cuts is going to exacerbate that realistically. This seems to be consensus. We'll see where that capital goes. It's been an interesting time because you've seen almost this U-shape where I can't recall a period of time where gold is hitting all-time highs, and so is quantum. This is an interesting barbell. You're seeing these quasi flight to safety ideas that are going to all-time highs. You're seeing Bitcoin near an all-time high, gold near an all-time high, silver all-time high, etc. But then you're seeing quantum up, you're seeing flying cars absolutely ripping. The fringe risk on tech and the risk off assets, everything is rising, which makes you wonder, to the point you've been making, if in fact it's just the dollar falling. And we're really just seeing the impact of debasement, because although Bitcoin is in all-time highs in dollar terms, Bitcoin is not yet an all-time high in gold terms. And I remember going on some media tours maybe 3 or 4 months ago, and some interviewers who are new to Bitcoin would ask me, Matt, where do you see this going? And I like using gold as a metric. I think Bitcoin, I can extol the values of Bitcoin as being far more useful than gold is, but it's a nice benchmark. Gold at the time was at 21 trillion and we were at 2 trillion, and that seemed like a nice 10x. Gold today is around 27 trillion.
Yeah.
So we keep chasing this high. So I guess that creates more of a headroom for Bitcoin. There's more room to advance compared to the big brother of gold, is that trad store value there. But time will tell, to your point, if these cuts precipitate more of an uptick, or if people start realizing, to your point, that maybe we have hit a peak.
Yeah. But how are you as a Bitcoin miner planning for the new supply of Bitcoin being cut in half? Theoretically, I would just think, back of the napkin math, that the price of Bitcoin has to double if the supply gets cut in half for you to stay at the same profit margin?
There's an old proverb that you can't control the wind, but you can adjust your sails. So as we look at the halving coming up in 2.5, 3 years.
Right. Still a ways out.
It's still a ways out. It'll be here before you know it. But we are already being cognizant of how do you adjust your sales. So as we think about where we would choose to deploy capital, knowing that it would take some time to get the sites up and running, shorten the runway pre-halving, we need to be very thoughtful about those expenses, even today. And these decisions made today will have decisions for quarters to come. So we're very aware of that. And I already factor that into some of our CapEx discussions. We have a roadmap to get to 50 plus exahash if we so choose. That being said, as we look at the opportunity to just buy spot, that could be compelling as well. So we're constantly balancing the buying spot versus buying miner trade. The other bit of the why buy miners trade that I think is relevant to your question is the last halving, the literal day of the halving, by the way, was our best ever revenue day for mining, best ever. We had transaction fees 5, 6, 7 times what we were making in terms of the block subsidy. That to me was a foreshock. So as I think about the next halving, I don't know yet what that transaction fee volume will look like. But not only do I anticipate that Bitcoin will have doubled by the next halving, and even if we go through some sort of mini winter, I think the next halving is a pretty appropriate time for that doubling effect. You're also going to hopefully see an uptake in that transaction fee volume as well. So there'll be a double whammy. There's the need to get simply appreciation on the underlying asset. But if we can get any kind of increased velocity in the usage or the utility of Bitcoin itself, that actually rewrites the model. So rather than us sitting here and conjecturing about a 450 decline mathematically to 225, just constantly getting macheted every 4 years, we start to wonder about what does it mean to own the future of what's effectively the Swift network on Bitcoin, and what is the value accrual that a Bitcoin miner or someone with massive amounts of hash rate would get from that network.
Yeah. Speaking of fees from the network, I believe today, well, I don't know when this recording is going to go out. So at the time of this recording, we had the V30 get pushed through from Bitcoin Core.
Great.
And that increases the, the op size got put in as a template, standard, default, I should say, which has a lot of people on both sides of the aisle. It seems like one of the reasons they did that would be to help miners create more fees. What's your view on that whole debate?
You're making an astute observation, which is that with the adoption of this upgrade, miners do win. There is a likelihood that the transaction fee or just the amount of things that are inscribed on the blockchain will increase. As miners, we are almost a service provider. We're infrastructure. People want to go on the toll road. It's not my business to ask where they're coming or where they're going. It's my job to process those transactions and really keep the toll road or the network safe. So for us, and secure. So for us, I take a macro view that there are lots of developers on both sides of this situation. I see the merits to wanting to really restrict what Bitcoin is for, but at the same time, I think a big part of the crypto libertarian ethos is letting people do what they want to do if they're willing to pay for it. And so if people want to really take advantage of these adjustments that have just been made by the upgrade, we're going to support where the community is indicating that it wants to go. Again, miners, you need to remember, are very conservative. So for us, the most important thing is that the blockchain stays up, stays secure, is defensible against any sort of 51% attack. We think spam is a problem, I think an even greater problem would be anything that would kind of jeopardize the blockchain itself. And unless we see increased transaction fee volume over the long term, that security budget is going to get a little bit tricky. So net, I'm open to the increase that we've just seen.
Yeah. I mean, unless it hurts it long term, but I do think that knots coming out, although I'm not really a fan of either. I wish we could just sort of stay where we were. But I think it is a healthy free market action. Well, let's try an alternative.
It is. You remind me of something, which is that governments hate competing. They hate it. When you go and you get a driver's license in California, and I live and get a driver's license in Texas, those departments of motor vehicles are not competing really,
No.
Which is why the experience is not always the best. The only place where governments historically have competed are their economics and then their defense budget and their defense industrial complex. And so what's been interesting about this from a Bitcoin perspective is that, to your point, a little bit of competition injects a bit of rigor. So I'm glad that these discussions are being had. I'm glad that there's a debate back and forth. To your point, changes can be made. They could be reversed or retracted if it was being seen as jeopardizing the ecosystem. You really want to avoid a monoculture. That is somewhat of what we're trying to escape, is this hegemony, right? And this inability to get out of the fiat debasement situation. And so part of that is offering a competitive alternative. And for things like knots, as an example, if they're willing to present an alternative, if people want to vote with their feet, we'll channel our inner crypto libertarian and we'll see what they do.
Yeah. I've heard of a third one trying to get some legs under it, being run by a nonprofit that would run a third option that'd be more of like an ossified code base. And it would only implement extremely urgent critical patches, and it would not do any improvements. So yeah, I'm all for the competition. That seems to be where I would lean. Like, let's not try to make things better. That's what Saylor's been talking about. The best way to ruin something is try to improve it. So how about we just, if there's a critical patch, we can put that in. Otherwise, let's just leave it as is. I think layer 2 should figure out how to move around layer 1, not the other way around.
I like that. I like that a lot.
Man, we covered a lot of good ground. I think that's a pretty good spot for us to stop. Do you have any big announcements you want to make? Anything people should be watching out for, paying attention to? What's happening this year?
Sure. So look, it's a big year for American Bitcoin. We launched April 1st. We went public September 3rd. That was a splash, but it was just the beginning for us. We're going to put in some really exciting quarters here now of growth. That was not a finish line. It was a starter pistol. So now we're out there. We're growing our layer 1. That's the mining. We're growing our layer 2. That's the treasury. And soon we'll be announcing how we're growing our layer 3. That's our ecosystem. So there is a lot to come. So I advise folks to keep an eye out for the American Bitcoin story because there's quite a lot ahead.
Got it. We'll make sure to link all that down in the show notes down below so everyone can follow along on Twitter and on their website. And with that, we'll go ahead and wrap it up. Thanks so much, Matt.
Thank you, Mark.